Hi everyone and welcome back. In this video, we're going to build on what we just covered in the prior video and talk about the next major piece of Schedule C, which is business expenses. Specifically, we're focusing on what makes an expense deductible for a business. So let's start with the big idea. For a business expense to be deductible, it must be ordinary, necessary, and reasonable. You'll see these terms come up again and again, and they are the foundation for determining whether an expense can be deducted. So what does ordinary mean? Let's break it down. An ordinary expense is one that is common and accepted in the taxpayer's trade or business. So this is not about what one person does, it's about what is typical for that type of business. So for example, a landscaping business buying equipment, a consultant paying for software, a retail store purchasing inventory. Those are all ordinary expenses because they are expected in those industries. Next is necessary. Necessary does not mean essential. It means the expense is appropriate and helpful for the business. So the IRS does not require that the expense be absolutely required, just that it makes sense in the context of running that business. And then finally, the expense must be reasonable in amount. This is where judgment really comes into play, and you'll see this, require a lot if you do decide to have a career in tax. You really need to apply your judgment. So even if something is ordinary and necessary, it can still be disallowed if the amount is excessive. So the IRS may look at, is this a normal amount for this type of an expense? And if not, does all or a portion of it need to be deducted, or is some of it disallowed? Now let's shift to the opposite side, expenses that are not deductible. Even if they might seem business related, there are certain types of expenses that are specifically disallowed. The first type are expenses that are illegal or against public policy. These are expenses that are not deductible, and this would include things like bribes, kickbacks, illegal payments. Even if those expenses are common in some industries, they are still not going to be deductible. The second grouping is fines and penalties. These are also not deductible. So if a business pays a fine to a government agency, that payment cannot be deducted. And then finally, we have lobbying and political expenses. These are also not deductible. These are specifically disallowed under the tax law. So even if the business incurs these types of expenses, when we're arriving at taxable income, we're not going to be allowed to take a deduction for lobbying and political expenses. So stepping back, here's how you should think about business expenses. The first step you want to understand, is the expense related to the business? Then you need to understand, is it ordinary and necessary? Step 3, you're going to look at, is it reasonable in the amount? Is the amount reasonable? And then step 4, you're going to look at, is it specifically disallowed by the tax law? If you go through those steps, you can analyze most any business expense question. This concept is extremely important because business expenses are what reduce taxable income. So the more expenses that qualify, the lower your taxable income. But the IRS places limits to make sure taxpayers are not deducting things that they shouldn't be allowed to. This brings us to the end of this video. In the next section, we'll talk about depreciation, which is a major category of business deductions. If you have any questions, reach out. Otherwise, I'll see you in the next video. Thanks.